We're discussing quarter 2 2024 for the Northstar Global Flexible Fund, the review period. The fund's objective is to outperform the US dollar flexible sector offshore, as well as large cap global equity managers through the cycle at lower levels of risk. For the quarter, the fund was down 82 basis points, quite a tough quarter for us, relatively speaking. The sector peer group is actually up 89 basis points. This is all in dollars. Year to date, we're up about 5%, and the sector average is about 4.5%. Funds exposure 64% in global equities, so relatively defensively positioned, 18% bonds, 6% in gold, and the balance in cash. With respect to the positioning of the fund and our market observations, the first being that the equity market is highly concentrated, with the top 10 stocks accounting for 35% of the market cap of the S&P 500 currently. This is historically high. There have been 6 of these events over time. In each instance, the market catches up, the balance of the market catches up in terms of share price performance to these large winners, or those overpriced large stocks correct in price. One of the concerns we have right now is not only is the concentration high, but those large stocks are driving the performance of the indices, and they're expensive, and earnings expectations are extremely high from the market for these companies. The converse is true for the rest of the market. There are a lot of high quality companies that are under-owned, underappreciated, with low earnings expectations from investors. That is where the largest opportunity lies currently, and where we have exposure. That didn't help in the quarter, of course, because the indices ran, and they ran with these top 10 large market stocks. Just in terms of bonds we view as reasonable returns that should come out of those for the next 5 years on a risk-return basis. And then the gold stocks that we own, or the gold exposure we own, we view lower interest rates as being good for gold. So the fund is quite defensively positioned, but we think extremely well positioned for what we believe will unfold in markets in the years ahead.